Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is August 12th, 2025, and we're diving into Plug Power's latest earnings report for Q2 2025. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Plug Power is a key player in the hydrogen economy, and their latest report provides some interesting insights into their growth and strategic direction.
Revenue and profitability overview. Let's start with the top line. Plug Power reported a revenue of $174 million for Q2 2025, marking a 21% increase year over year. John, what are the key drivers behind this growth?
The growth is primarily driven by robust demand for their GenDrive fuel cells, GenFuel hydrogen infrastructure, and GenEco electrolyzer platforms. Notably, the electrolyzer revenue tripled to approximately $45 million, highlighting the global expansion and strong market demand for hydrogen solutions.
And what about profitability? How is Plug Power managing its margins?
Plug Power has made significant improvements in its gross margin, which improved to minus 31% from minus 92% year over year. This is largely due to cost reductions in services, equipment, and improved hydrogen pricing, all part of their Project Quantum Leap initiative.
Operational efficiencies and future outlook. John, can you elaborate on the operational efficiencies Plug Power is implementing through Project Quantum Leap?
Absolutely. Project Quantum Leap is focused on optimizing the workforce, consolidating facilities, and reducing costs in professional services and software. These efforts have led to significant cost structure gains, which are crucial for improving their financial performance.
How is Plug Power positioned in terms of cash flow and liquidity?
Plug Power has reduced its net cash used in operating and investing activities by over 40% year over year. They ended the quarter with over $140 million in unrestricted cash and have access to an additional $300 million in debt capacity, which provides a solid financial cushion.
Strategic initiatives and market position. Let's talk about Plug Power's strategic initiatives. How is the company expanding its market presence?
Plug Power is aggressively expanding its GenEco electrolyzer programs, with over 230 megawatts currently mobilized across Europe, Australia, and North America. They've also extended a major hydrogen supply agreement with improved economics, which should support better margins in the second half of the year.
And what about their GenDrive material handling solutions?
The extension of the investment tax credit through 2026 is stimulating demand for their GenDrive fuel cells. This is expected to drive new bookings in the second half of 2025, setting the stage for significant growth in 2026.
EPS forecast and analyst expectations. Now let's discuss the earnings per share. Plug Power reported an adjusted EPS of minus 20 cents, which missed the forecast of minus 15 cents based on 8 analyst estimates. John, what does this mean for investors?
While the EPS miss is a concern, it's important to consider the broader context. Plug Power is in a growth phase, investing heavily in expanding its capabilities and market reach. The focus should be on their revenue growth and margin improvements, which are positive indicators for future profitability.
Key takeaways. In summary, Plug Power is showing strong revenue growth and significant improvements in operational efficiencies despite the EPS miss. John, any final thoughts on Plug Power's investment prospects?
Plug Power is well positioned in the hydrogen economy with strategic initiatives that are likely to drive future growth. Investors should keep an eye on their progress towards achieving gross margin neutrality and their ability to capitalize on market opportunities.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Plug Power's performance in the comments below. Until next time.